Hello and welcome to our special segment, REIT Connect, where we aim to understand real estate investment trusts and how it can make a meaningful contribution to your diversified portfolio. To understand its importance in the mutual fund space, let me welcome on the show Navneet Munot, the MD and CEO of HDFC AMC. Navneet, always a pleasure to welcome you on CNBC-TV18. My first question, since we're talking about understanding REITs and its importance in the mutual fund industry, which has become such a strong force for investment by our investor community, what do you think of this particular asset class in a diversified portfolio and the meaning of it for an investor?
Thanks, Nisha. Always a pleasure to be with you. You know, there are several transformational forces in the economy that we talk about: formalization of the economy, digitalization of the economy. In our industry, we have also been witnessing financialization of savings in India. These are the early days of financialization of savings in India. But one of the important trends that we are going to witness, and these are early days, is the financialization of assets. Real estate is a very large part of investors' portfolio or part of the economy. Gold is another one. These are the physical assets which get converted into financial assets that can get transacted, that can get traded in the public markets as well. And the fractionalization, where through the regulation and through other means, they get traded as a stock or a bond. This is a very, very big trend. Of course, so far we have only 4 or so REITs and around 4 InvITs, but over a period of time, given the size and scale of this industry and the way regulators have been working, the policymakers have been working to make this asset class a lot more accessible to a larger set of investors in a different way than historically it has been looked at. I think will augurs well for everyone, including institutional investors like us. From our portfolio perspective, I think participation in commercial real estate through this mean adds to the portfolio diversification, adds to a different source of risk and return, and it's an interesting fit. But as I said, there are just 3 or 4. It's been like a couple of years, and I must compliment the policymakers for doing what they have been doing in terms of increasing the transparency, in terms of improving the regulation and making it more accessible to all kinds of investors, including investors like us.
That's right, Navneet, you well pointed out. It has been a laborious work by the industry as well as the regulators to make it a mainstream product over a decade, I would say. And a lot of effort is really going on into it. In fact, one of the SEBI spokesperson had shared on our REIT Connect that REITs and InvITs can take the scale and size of as much as the GDP of the country in due course of time. So that's what SEBI and the regulators are really aiming for. But in the Indian way of investing, Navneet, how does this asset class and this product really fit in the way of investing for Indian mindset?
So Indians have always had an affinity towards real estate as well as gold, the 2 physical assets. In fact, if you look at the balance sheet of Indian households, almost 50% would be in real estate and around another 10 to 15% would be in gold. Now, gold is available in financial form like an ETF or a gold fund or even a sovereign gold bond. Now you are seeing the same with the real estate. Through the REITs, they can participate in a commercial real estate. And it's an interesting asset class. You participate in the income as well as in the potential of capital gains. As I said, that Indians have an affinity towards this asset class, but it's better to participate in a form like REIT rather than doing it directly, and it may be difficult for a large number of investors to even participate.
That's right, Navneet. And in fact, mutual fund traction is the cornerstone of its larger adoption. What do you think will increase the traction amongst mutual funds in investing into REITs?
As I said, there are only 4 of them. And if I remember, I think the overall size would be around 80,000 crores or so. The size of all the 4 REITs which are listed. The free float would be somewhere between 55 to 60,000 crores. mutual funds would be owning anywhere between 15 to 20% of that free float. These are early days, as I mentioned earlier. I think we have a long way to go. Thanks to policymakers, we are seeing an increased transparency levels, but there is a lot more that we need to do to make this as vibrant or a robust asset class the way it has been in some of the other places like United States. As of now, we can invest up to 5% in a single REIT and up to 10% of the entire fund into all the REITs put together, maybe over a period of time, not necessarily today, but as the number of listed REITs increase, as exposure increase, maybe there could be a time to have a relook at that. And I think on the taxation side as well, there could be potential for mutual funds to launch a product which mainly invest in REITs and InvITs, as once we have a more a larger universe available and the size increases. But in that case, the policymakers may have to look at the taxation, that if an investor is owning it through a diversified, professionally managed mutual fund versus owning it directly, how to ensure that there is a level playing field.
All right, so that's one technical aspect that needs to be corrected, Navneet. But equity classification, you think that will also improve the traction a lot more?
So, I mean, the risk profile of REIT is different than of equity and is still predominantly hybrid in nature. Due to the nature of the underlying asset and the investment, this is partly due to the lower execution risk and stable rentals. On one side, there are restrictions on the external debt, like pure equity. But I think if mutual funds which want to launch a product where bulk of the underlying investment is in REITs and InvITs, if there could be some tax incentive, there would be potential for this asset class to grow faster. Because what you're trying to bring in for retail investors is the benefits of a diversified portfolio, a professional fund management, trying to get a better governance and a better management within the REITs and InvITs. And then, of course, if we top it up with some bit of tax benefit, or at least at par with owning it directly.
All right, so those are the suggestions really coming in from mutual fund industry. Navneet, final question to you. Can't let you go without your comments on the market at the moment, because we are looking at some of the big events like elections, interest rate cycle turning, earnings, monsoon. What is your near-term view on the market, and what are the themes that are resonating most with you?
So, Nisha, when is the last time when we didn't have something like this to talk about? There would be some factors, there would be something happening in some part of the world which will make us believe that there are risks on the horizon. It will never go away. But I think overall, if we look at India's macro, I think they look pretty, in a good shape. From a corporate profitability trajectory perspective, over the next several years, I think corporate sector is ready to participate in the higher growth of India. From a valuation perspective, there are definitely pockets where valuations have run ahead of fundamentals, but over a period of time, what investors need to focus is on participating in the continuous earnings growth, the capability of corporate India to deliver the earnings growth in line or slightly better than the overall GDP growth in India for the next several years. And from a liquidity and sentiment perspective, I think both the continuous flow of domestic liquidity through the SIP mode in mutual fund, and of course the global liquidity, which I expect over the next several decades will continue to chase India as a high growing economy, I think will keep us in good stead. But of course, as you mentioned about some of these factors on the horizon, markets are likely to remain volatile given where the valuations are.
All right, so biggest takeaway coming is that India in a sweet spot, but valuations definitely have run ahead of the fair valuation. All right, thank you so much, Navneet Munot. Always a pleasure to have you on CNBC TV18. And with your thoughts on REIT as an asset class as well are very, very essential as well as valuable. Thank you so much for joining us on CNBC TV18. With that, we'll slip into a short breather. More on markets on the other side. Stay tuned.